Welcome to our channel. Today we're diving into the 7 essential steps to generate wealth. Whether you're just starting out or looking to optimize your financial strategy, these steps will guide you towards financial success. Building wealth is a journey, not a sprint. It takes time, discipline, and consistency, but the rewards are well worth it. So let's get started on the path to financial freedom. Before you even think about investing or side hustles, we need to get crystal clear on your why. Why do you want to build wealth? What are you working towards? Is it the peace of mind knowing you have a safety net? Is it early retirement so you can travel the world? Is it financial freedom to pursue your passions without worrying about money? Write down your financial goals. Not just in your head, put pen to paper. Make them specific, measurable, achievable, relevant, and time-bound. Want to buy a house? Great. How much do you need for a down payment? What's your timeline? Having a clear vision of your financial destination will fuel your motivation and keep you focused when things get tough. Trust me, there will be times when you're tempted to splurge or stray from your budget, but when you have that powerful why driving you, it's much easier to stay disciplined and make smart financial choices. Remember, your goals are personal to you. Don't compare your Chapter 1 to someone else's Chapter 20. We're all on our own journeys. Focus on your own goals and celebrate each milestone along the way. Now that we've defined your financial goals, it's time to build the roadmap to get you there. That roadmap is your budget. I know the dreaded B word, but trust me, your budget is your financial GPS. It keeps you on track and helps you reach your destination faster. Start by tracking your income and expenses for a month. Use a budgeting app, a spreadsheet, or even just a notebook. The key is to become aware of where your money is going. You might be surprised by how much you're spending on things like takeout coffee or subscription services. Once you have a clear picture of your cash flow, you can start allocating your money towards your goals. This is where the magic happens. By consciously deciding where your money goes, you take control of your finances instead of letting them control you. Remember the 50-30-20 rule. Allocate 50% of your after-tax income to needs, 30% to wants, and 20% to savings and debt repayment. Needs are your essentials like rent, groceries, and transportation. Wants are things that bring you joy, but aren't essential, like dining out or entertainment. The 20% for savings and debt is crucial. This is where you build your emergency fund, invest for the future, and pay down any high-interest debt. Make this 20% non-negotiable. Treat it like paying yourself first. You've heard it before, it's not about how much money you make, it's about how much you keep and how hard that money works for you. That's where saving and investing come in. Start with building an emergency fund. This is your financial safety net for unexpected expenses like car repairs or medical bills. Aim for 3 to 6 months worth of living expenses in a high-yield savings account. Once you have your emergency fund in place, it's time to start investing. The earlier you start, the more time your money has to grow through the power of compound interest. Compound interest is like magic. It's when your money earns interest and then that interest earns interest and so on. It's like a snowball effect for your wealth. Now, I know investing can seem intimidating, but it doesn't have to be. There are plenty of resources available to help you get started. You can choose from low-cost index funds, exchange-traded funds, ETFs, or even real estate. The key is to diversify your investments and not put all your eggs in one basket. Remember, investing involves risk, but not investing is even riskier in the long run. The stock market goes up and down in the short term, but over the long term, it has always trended upwards. So buckle up, stay invested, and let your money grow over time. Imagine having multiple streams of income flowing into your bank account, like rivers converging into a powerful stream. That's the power of income diversification. It not only boosts your earning potential, but also provides financial security and flexibility. Start by exploring your skills and passions. What are you good at? What do you enjoy doing? Can you turn any of those skills into a side hustle? Whether it's freelance writing, graphic design, online tutoring, or driving for a ride-sharing service, there are countless ways to make extra money in today's gig economy. The internet has opened up a world of opportunities to generate passive income. Consider starting a blog or YouTube channel, creating and selling online courses, or even investing in dividend-paying stocks. Remember, building multiple income streams takes time and effort. Don't expect to get rich quickly. Focus on consistently building and nurturing your income sources, and over time, They will compound and create a solid financial foundation for you. Chapter 5. Step 5. Become a financial guru. Knowledge is power. In the world of personal finance, knowledge is power. The more you know about managing your money, the better equipped you'll be to make informed financial decisions. Read books, listen to podcasts, and follow reputable financial websites and blogs. There are countless resources available to help you expand your financial literacy. Learn about budgeting, investing, debt management, and other essential financial concepts. Don't be afraid to ask questions. Talk to financial advisors, mentors, or friends and family who are knowledgeable about personal finance. The more you learn, the more confident you'll become in managing your money. Remember, financial literacy is an ongoing journey, not a destination. The financial landscape is constantly evolving, so it's essential to stay updated on the latest trends and strategies. Make it a habit to continuously educate yourself about personal finance. Chapter 6. Step 6. The debt trap. Avoid this wealth killer. Debt can be a major roadblock on your path to wealth building. It's like a heavy anchor dragging you down and preventing you from reaching your financial goals. So how do you avoid this wealth killer? Let's break it down. First and foremost, avoid high-interest debt like the plague. Credit card debt, payday loans, and other forms of predatory lending can quickly spiral out of control and derail your finances. If you're currently struggling with high-interest debt, prioritize paying it down as quickly as possible. Live below your means. It's tempting to keep up with the Joneses and buy the latest gadgets or designer clothes, but living beyond your means is a surefire way to accumulate debt. Focus on building a solid financial foundation by spending less than you earn and saving consistently. If you need to borrow money, explore options with lower interest rates such as personal loans or balance transfer credit cards. Make sure you have a solid plan to repay the debt as quickly as possible. Chapter 7. Step 7. Review, adjust, repeat. Your financial plan isn't set in stone. Congratulations, you've made it to the final step. But remember, building wealth is an ongoing journey, not a one-time event. Your financial plan isn't set in stone. It's a living document that needs regular review and adjustments. Set aside time each month to review your budget, track your progress towards your goals, and make any necessary adjustments. Life is unpredictable, and your financial plan should be flexible enough to adapt to changes in your income, expenses, or goals. Did you get a raise or a bonus? Great. Increase your savings rate or invest more aggressively. Did you experience an unexpected expense or job loss? No worries, adjust your budget accordingly and tap into your emergency fund if needed. Remember, the key to success is consistency and persistence. Don't get discouraged if you encounter setbacks or make mistakes along the way. We all do. The important thing is to learn from your experiences, adjust your plan, and keep moving forward. Thanks for watching. If you found these steps helpful, don't forget to like, subscribe, and hit the notification bell for more tips on building wealth. Remember, building wealth is a marathon, not a sprint. It takes time, discipline, and consistency. Start implementing these steps today, no matter how small. Even small changes can make a big difference over time. See you in the next video.